Hello everyone, welcome back to the Liberty Mundo channel. Please subscribe and like the video and get in touch with us for help with asset protection, residency overseas, and second citizenship. Today we need to talk about something serious happening in France that could affect economic freedom worldwide. Just days ago, the French National Assembly voted for a wealth tax targeting their nation's most successful individuals. While many are celebrating this as a victory for tax justice, I'm here to explain why this is terrible news for anyone who values economic liberty and prosperity. Let's break down what's actually happening. The French Parliament, pushed by the Green Party, just voted to impose a 2% wealth tax on anyone with assets over 100 million euros. That's about 1,800 households they're targeting. They claim this will bring in up to 25 billion euros annually. But here's why this math doesn't add up and why this policy is so dangerous. First, wealth isn't just sitting there in a vault like Scrooge McDuck's money bin. It's actively invested in businesses, startups, and innovations that create jobs and drive progress. When you tax wealth at this level, you're not just taking money from the rich. You're pulling capital out of productive enterprises that benefit everyone. Think about it this way. When a successful entrepreneur builds a company, their wealth isn't just numbers on a screen. It represents factories being built, employees being hired, and new products being developed. When the government decides to seize that wealth, even just 2% of it, they're effectively forcing these business owners to liquidate parts of their productive enterprises just to pay the tax. But it gets worse. History has shown us time and time again that wealth taxes don't work as intended. When France tried this before, guess what happened? The wealthy simply left. They moved to other countries, taking their investments, their businesses, and yes, their tax revenues with them. Capital flight isn't just an economic theory, it's a reality that France has already experienced firsthand. What's particularly frustrating about this situation is how it was passed. The far-right party abstained from voting, effectively allowing the left to push through this destructive policy. It's a perfect example of how populist politics from both extremes can combine to undermine sound economic principles. Now, supporters of this tax like to talk about inequality. They'll tell you it's about fairness and making the ultra-rich pay their share. But they're missing a fundamental truth. In a free market, wealth inequality often reflects differences in value creation. When someone builds a successful company that improves people's lives, they accumulate wealth because they've created value for society. Punishing that success doesn't help the poor. It just reduces the incentives for innovation and excellence. Here's another practical problem they're not talking about. How do you even accurately value complex assets? If someone owns a private company, unique real estate, or intellectual property, determining their exact wealth becomes an administrative nightmare. This means creating huge new bureaucracies just to track and assess these assets. More government, more waste, more interference in private enterprise. The good news, if there is any, is that this bill still needs to pass the French Senate, where it will likely face strong opposition. There's also a chance the Constitutional Council could strike it down as confiscatory. But the fact that it got this far should worry all of us who care about economic freedom. Look, if we really want to address economic inequality, the solution isn't to punish success, it's to remove the government barriers that prevent others from succeeding. We need to end corporate privileges, maintain sound money, and let truly free markets work their magic. When people can freely exchange goods and services, when entrepreneurs can innovate without excessive regulation, prosperity naturally spreads throughout society. This French wealth tax might seem like a distant issue if you're watching from another country, but bad ideas have a way of spreading. Today it's France, tomorrow it could be your country. That's why we need to understand why these policies fail and be ready to speak out against them. Remember, every attack on property rights, every new tax on success, every government intrusion into the free market makes us all poorer in the long run. Economic freedom isn't just about protecting the wealthy, it's about protecting everyone's right to create, innovate, and prosper through voluntary exchange. Thank you for watching. If you found this analysis helpful, please like and subscribe for more content on asset protection, residency, and citizenship overseas. See you in the next video.